Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday, but lots of cues to watch out for given the fact that it's D-Day for the MPC outcome. In fact, RBI Governor Shaktikanta Das will be announcing the rate decision at 10 a.m. We'll be talking about that on the show. We'll be also talking about all the cues for trade and of course all the stocks that will be in the limelight in today's session. And of course we'll also be getting all your stock related queries answered by our experts on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we go any further, let's take a look at the top headlines at this hour. Wall Street ends in the red ahead of cues from September's jobs report due later today. In fact, US bond yields have eased from 16-year highs, and that's a big positive because Asian markets are reacting to it and they're trading largely higher. And the GIFT Nifty is also signaling a mildly higher start for the Indian market. Oil prices continue to decline. Brent falls around 2% to $84 a barrel as worries over demand outweigh the OPEC's decision to persist with output cuts. The RBI will announce its policy decision later today. Street expects a status quo policy with no change in stance. However, the central bank could revise inflation forecast upwards. And among stocks in focus, as jet fuel prices soar, Indigo says it will introduce a new pricing structure which will charge passengers for fuel. Meanwhile, Bajaj Finance's board approves 10,000 crore rupee fundraise via a QIP as well as a preferential issue. Well, with that, let me bring on board Latha Venkatesh to put into perspective as to what we should be expecting from the policy later today and whether or not there will be any tinkering with the stance going forward. Hi, Latha ma'am. Thanks a lot for joining in. Of course, street RBI policies are largely a non-event these days, given the fact that we are expecting a pause this time around as well. But there is the headache of rising oil prices and surging bond yields in the US. So how do you think the RBI will react to that, and what is it that you will be keenly watching out for from this policy?
You're quite right that if the market's going to treat it as a non-event, it has very good reasons. It's not just that people are not expecting any rate action. They are unanimously not expecting a rate action. CNBC TV 18 poll, 100 on 100, no action, no change in stance. We do a CNBC TV 18 Citizens MPC, our own shadow MPC, 100 out of 100, no change in rates. So that expectation is out of the way, but the global environment is different. Yeah. The global environment, when we went in the August 10th policy, the US yields were 3.95. Now they are 4.8 or 4.7. So it's a big change in what is the currency of the world, the cost of capital for the world. So will they do something? Will they indicate caution? They have to indicate caution in some way. I'm not changing, but I'm worried. How do they indicate that? So there are wild guesses, and let me repeat, it's a wild guess. Will they raise the repo rate by 10 basis? Will they do some diluted CRR like that ICRR which they did earlier? Yeah. Or will they raise risk weights on some luxury items, like, luxury home loans above 2 crore or 3 crore or something like that? Will they just want to show, or unsecured loans? I mean, something like that. My sense is that they can be simply cautious in their language. RBI is excellent at communication, and they may simply say that this is how it is, but other things being equal, this is our policy. Other things, if they are not equal, that what you call in economics as ceteris paribus. If it is not ceteris paribus, other things have changed, then I will change. Now, what is the big worry? If you hold in dollars, now you are getting 5% because the 10-year is at 4.7 and the near-term rates are even higher. You want the rupee to be equally attractive. Otherwise, exporters, people who are working abroad and remitting money will prefer to keep some money in dollars because the differential has to be attractive between the two currencies. That may propel them to keep near-term rates high. So squeeze out liquidity, the interbank call rate, 1-day money, 2-day money, 10-day money, the near-term rates, the yield goes up so that it is attractive for people to that they may do something. But really, that's anyone's guess. They can come with innovative steps. They may simply use good language. And just one more point that everybody will watch. What is the inflation forecast for FY25? We already know for Q1, but Q2, Q3, Q4 will come out in what is called the monetary policy report. And part of it will be incorporated in the statement that if they are not going to indicate a coming towards 4.5 at any point in time, or even the average, then the market will push back the rate cut expectations. If it is 4.5, see, next 2Q of next year is going to be a very low number because the base is so high. But is the full year going to look clement? That'll be another thing to watch.
All right, ma'am. With that, I leave you to go and attend the speech at 10 a.m. and we'll be touching base with you at 11 a.m.
Sure.
after the policy is announced, and we will be discussing the policy fine print with you at 11 a.m. But with that, let's shift focus and get on board our technical expert for today. Joining me is Raja Venkatraman of Neotrader. Good morning, Raja. Great to have you on the show as always. After a blip, the Nifty is back above that 19,500 mark, fairly resilient. We have seen one-off sell-offs coming in, but we have managed to come off lows as well. So for today, what is the setup looking like, and how much of a reaction would you expect from the RBI policy when it comes to the Nifty on the charts?
Yeah, good morning, Nandita. So as we have been noticing that there has been a very good resilience to the bullish camp, from the bullish camp, and the lower levels are continuing to be bought into. So the immediate support which one is looking at is around 19,300. That's where the earlier levels were also tested, and yet again that level has come into play, and it has managed to hold out the bearish force which was seen a few days ago. Now, looking ahead into the RBI policy, we need to ensure that once again, like Latha Venkatesh mentioned, that the status quo is very much evident, and if that kind of scenario is going to be maintained, we need to see how are the other correlated sectors going to react. Now, when you take a look at Bank Nifty has been struggling to hold on to the 44,000 levels. There has been attempts periodically to move up, but then we are not seeing much kind of traction emerging from the Bank Nifty and the associated sectors. So that is going to be the key play for the bullish sustenance. So I would wait for a strong closing below 44,000 to change my mind. And if you see over the last quarter, the 44,000 levels have been defended quite well. Now, if the overall scenario is going to change drastically, then that level is going to be broken. Otherwise, we will continue to expect a range-bound action, policy or no policy. So now, how do we take this ahead? The entire month, based on the kind of time cycle signatures which I am studying, I find that the market will continue to remain range-bound. Now, for example, the easing of oil prices is going to help market generate some further bullish enthusiasm, and this will continue. So indices is going to be more this month will favor the option players who would like to play some strategies, and there will be a lot of stock specific action considering the result season. The main result season is kicking off from 12th of October. So all that could add some stock based action, and one should continue to hold on to the bullish bias as of now.
All right, continue to hold on to the bullish bias as of now, and of course, trade is likely to be range bound as well going forward. But let's talk about the stock of the day, Raja. Bajaj Finance. In fact, board has approved a fundraise of somewhere around 10,000 crore rupees, 8,800 via QIP, and the rest via preferential allotment to Bajaj Finserv. If you look at the stock, over the past 5 days, I think in the run-up to the board meet on fundraise, the stock hasn't really done much. But street is fairly bullish, and some of the brokerages have also pegged targets, price in excess of 10,000. So where would you expect the stock to head from here, at least in the shorter term? Long term, of course, we can talk about it later. But with a 1 to 2 month perspective, how would you look at the stock now?
So currently, the festive season, all those news factors will kick in. But then what I feel is that the stock has encountered a strong resistance zone around the July highs. So now, considering the news flow, probably this news flow has already been priced in. So if one needs to consider Bajaj Finance as a long opportunity, I would look at some pullback towards the region of around 7,700 to 7,650 or thereabouts to actually consider a long opportunity in Bajaj Finance, but not at the right moment. Stock is set for some bit of decline, so I would avoid it or use it for a short play. But if I am an investor, I would look to buy it at around 7,700.
All right, that's the view on Bajaj Finance. But, let's shift focus to a money control exclusive. In fact, my colleague Ashwin Mohan is joining in now. He had reported that, of course, SoftBank is looking to exit or, in fact, sell another 2.5% stake in PB Fintech. Ashwin, good morning. This is an additional stake sale of 2.5% coming in on PB Fintech. But how much of a stake will SoftBank be left with after this additional stake sale?
Good morning, Nandita. So the block deal mania clearly continues as far as the Indian capital markets are concerned. We have seen a series of block deals in several companies in recent times. Also in some of the new age companies as well. PB Fintech, of course, is the parent company of insurance aggregator Policy Bazaar. So the story that we broke last evening was that SoftBank, which is one of the key investors in PB Fintech, is looking to sell an additional 2.54% stake, to be exact, in PB Fintech via block deal. Now, the reason why I say additional is because they had done a block deal last year as well, Nandita, and this was around December when they had sold around a 5% stake via block deal route too. So this is part of an ongoing process where SoftBank is looking to pocket some neat returns in PB Fintech. If you look at the PB Fintech stock, over the last 6 months, it's rallied about 28%. So probably that's the reason why SoftBank is looking to pocket some returns. This is not a complete exit. This is just a part exit. So before this deal, SoftBank had about 4.39% stake in PB Fintech. After this deal, if you subtract the amount that they're planning to sell via the block deal route, they'll be left with about 1.85% stake. So that's where we stand as of now. The trend of some of the early investors, the early IPO investors of new age companies looking to dilute their stake via block deals, that continues. And we'll have to wait and watch to see what SoftBank does with the balance 1.85% stake. It can be safely assumed that at the right time they may look to exit that as well via the block deal route. But as of now, it's a 2.54% stake. And the block deal is valued at around $105 million, Nandita, and it got launched yesterday. Back to you.
Right. Thanks, Ashwin, for that. Of course, that was a money control exclusive that we're talking about. And of course, we'll be watching out for the stock as the block deal has been launched. Raja, what is your thought on PB Fintech, given the fact that, some of these new age companies have staged a stellar comeback after the kind of drubbing they had seen last year? In fact, if you look at PB Fintech on a YTD basis, the stock is up somewhere around 70% or thereabouts. In today's session particularly, how much of or what kind of a support level would you be watching out for when it comes to a PB Fintech?
Yeah, so when I look at the kind of news flow that is coming in and combine it with the price action, I can see that over the last 2 months, the stock has spent some time in consolidation. So what I would wait for to participate in PB Fintech is a move above 782 levels. Now, if that begins to happen today, then that would be a good level to participate. Or you can look towards a pullback towards the region of around 730. So that will be a good support. So these are two levels which I'll be watching out for. So intraday supports, there are no specific intraday supports. I would look at it from a long-term play, and the stock is definitely doing well even on higher time frames. It's clearly showing a very V-shaped recovery over the last entire year. It has shown a V-shaped recovery, and it looks like a breakout above these levels which I mentioned would we can expect a target towards 1100 within the next 6 months.
All right, a target of 1100 within the next 6 months for PB Fintech. But let's shift focus and take up some viewer queries now. Quite a few trickling in this morning. The first one, I want to bring your attention to Maruti Suzuki. Heman Jaju wants to know whether it's a buy, sell or a hold. I think Maruti as a stock has lost some steam over the last 1 month or thereabouts. Would you advise investors to use dips and buy into the stock now?
Yeah, considering the kind of the play which is going to happen the next festive season, which is just getting started. So I think that this kind of reaction in Maruti, which we have witnessed in the last few days, could be a good opportunity for us to initiate a long. We need not wait for further dips. It would be a good time to enter into Maruti at current levels.
All right, good time to enter into Maruti at current levels. But what about Tata Motors? we have a query coming in on this stock as well from Manish Kumar. How would you play this stock now, given the fact that, sales figures have just come out yesterday and Street is pretty constructive on the stock now?
Correct. The entire price move and the kind of news flow which is emerging for the auto numbers, the festive season, etc. So earlier stock was also on similar grounds. Maruti had given a correction. Now Tata Motors is holding the prices, the highs around 625 levels quite well. So which clearly says that the bullish momentum in the stock is not giving up. So one could continue to look to trade at current levels. And if you can also add to your position once it crosses 640 levels, because it opens up door towards 680 to 720 within the next 3 months.
All right. The momentum, of course, remains on the positive side when it comes to some of these automakers. But let's also talk about aviation stocks. Indigo, SpiceJet in focus, given the fact that these airlines will be levying a fuel charge, to offset the ATF price hike, right? And of course, we also have the World Cup season. We've seen airfares touch the roof. On the chart, SpiceJet and Indigo, would you say that there is a fair bit of upside going forward for at least over the next 2 to 3 months?
Yeah, so one positive news is offsetting the other negative news. So that way, the situation remains status quo. So overall trends are remaining positive, and one should continue to look at both of them, Indigo as well as SpiceJet, from a positive frame of mind. Now, between if you give a priority, I will give the priority to Indigo. SpiceJet has corrected sharply, and yes, it is down to some very good support levels around 24. So if you are looking to trade the 2-digit stocks, then this would be a good play, and having a stop loss below 24 would be a good ploy to trade this particular situation. And the targets we can expect is in the region of around 32 to 36.
All right, that's the view on the aviation pack. But let's talk about a UPL now. Saeed Khan wants to know your thoughts on whether it's the right time to buy into a UPL, given the fact that it is close to 52-week lows and the shares have been under pressure for quite some time now. But for the long term, do you think it's the time to pick it up?
No, the entire chemical space has been undergoing a lot of issues at the moment, and those issues are very visible on the price action. And the kind of continued upward, any rally seen in these stocks are being sold into. So it would be an avoid from my side from an investment perspective.
All right. UPL is an avoid. Hope that answers your query. But we also have a query on IDFC First Bank. Manjunath wants to know if this is the right time to look at an IDFC First Bank for the long term at current levels. Of course, the company is raising funds via QIP as well. And, even though private banks have, sort of underperformed, do you think this is the right time to actually load up on some of these and wait for the long term for gains to kick in?
See, IDFC First Bank have done a lot of decent structural changes, and that has resulted in the price moving up from almost near 60 levels to 100. So now at this juncture, I would not be a buyer in IDFC First Bank. I would look for some bit of correction to buy into. Otherwise, I'm going to be experiencing these kind of shocks. So I would rather wait for a dip towards the region of around 85 to around 80 levels, where I would be more comfortable from a risk perspective.
All right, that's the view on IDFC First Bank. But aside of all this, how should one play Zomato now? The stock has had a stellar run. Yesterday itself, it was up somewhere around 5 to 6% or thereabouts. And of course, we have the World Cup tournament that is on, and orders on the rise, and there could be more partnerships with restaurants as well. Stock has cleared the 100 rupee mark, but where do you expect the next resistance to come in for this stock?
So, like you rightly said, positive news flows are coming into hotels, aviations, and even the FMCG companies are going to expect, especially the spirits and like Jubilant Foodworks also could be again in play. So these are some stocks which are going to have a thematic, tailwind, and this Zomato will definitely see the benefit out of that. And I am looking at a target zone towards 118 within the next 1.5 months. And this could be very much possible thanks to the World Cup and other factors kicking in.
All right, that's the view on Zomato then. But what about IT stocks, Raja? How will you play some of these heavyweights like TCS, Infosys ahead of earnings? We have TCS reporting on 11th, we have Infosys reporting on 12th. These stocks have staged quite a smart recovery from, over the last 3 months or thereabouts. But heading into the earnings season, how should one position themselves in some of these stocks?
So these stocks are definitely showing a good recovery. And if you see since last October, you spoke about TCS. From last October low to this October, in the last 1 year, the stock has moved up decently, though with intermittent shocks. So one needs to consider that when the market tends to get a little range bound, IT and pharma could definitely pick up some steam, because that's where people will look into, and that is a kind of pattern which is developing at the moment. Last week we saw Glenmark and Lupin showing a good move, and also the other pharma companies catching up. So you can see that the IT, in comparison to the large caps, I feel that the mid-tier IT companies will definitely do much better, and that is why compared to a TCS, Infy, Wipro, I would prefer HCL Tech, TechM, Persistent Systems, LTTS, LTIM. Those are a much better bet for me in the IT space.
All right, focus in on the mid-cap IT rather than the large-cap IT. That's the view from Raja. But let's also take up a query on Infybeam. Mahendra Sharma wants to know your thoughts, whether it's a good long-term or short-term investment at the current juncture. The stock was up somewhere around 13% or thereabouts yesterday. How does one play into this rally?
Yeah, there has been a surprise jump which has been displayed yesterday, and after creating a double bottom on the charts, there has been a very good breakout here. So based on the kind of projections which we can expect, the target zones are emerging towards the region of around 24 to 25. So if one is actually looking to participate in this counter, this could be a good play for the levels mentioned.
All right, that's the view on Infybeam. But, I want to get in your thoughts on a Godrej Consumer. The company has given its Q2 business update. Organic business saw mid single digit volume growth. But, personal care also grew in low single digits. And, Park Avenue and Kama Sutra brand that it had acquired, the performance of these two brands have increased or improved on a quarter-on-quarter basis. In fact, both the brands are on track to achieve full year guidance as well. But the stock has not been doing all that well. Last 1 month, we've seen the stock, give negative returns. But, would you expect the stock to now stage a comeback going forward, or do you think it's going to see more downside from here?
This stock has never been very true to any side of the trend. So I would not prefer to, either trade or invest into this counter. So on the whole, it looks like it's showing a good recovery, etc. But then it always gives you a lot of pain than gain. So you might as well avoid it.
All right, avoid Godrej Consumers, that's the view then. But what about ITC? We have a query on this stock from Srujan, and he wants to know your thoughts. But ITC has been stuck in a range around that 430 to 450 mark. Would you expect the stock to break out of this range anytime soon, or do you think it's likely to be range bound going forward?
Actually, the thing with ITC is that the recent negative news flow which has come, it has actually impacted the stock quite a bit, and the stock is set for some more decline. So those who are holding ITC should exit ITC and look for lower levels to buy into. So lower levels are emerging around, say, 401, 402.
All right, look for levels of 401 to 402 on ITC. Hope that answers your query. But with that, we've come to the end of this query segment. Raja, before I let you go, what are you flagging off for viewers this Friday morning?
Yeah, so I would like to recommend a stock from the mid-cap space, and that is Syrma Technologies. I would like to give a buy recommendation in Syrma at around 638. We saw a good move yesterday. It came out of its recent consolidation. Stop at 625 for a target of 658 and 677. And my another buy call is on Lupin. at 1157 with a stop loss of 1140 for a target of 1178, 1190.
All right, those are the stocks to watch out for from Raja's table. With that, Raja, thanks a lot for joining in this morning and sharing your thoughts with us, and of course also addressing all our viewer queries.
Thank you.
Well, with that, we've come to the end of this edition of Morning Trade, but don't forget to tune in at 10 a.m. When the RBI governor will be announcing the MPC's rate decision, and we'll also have a battery of experts to decode the fine print thereafter at 10:30 a.m. So don't forget to tune in for that. But for now, it's a goodbye from me. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.